Joining us on the line from D.C. is Michael Woolfolk, Managing Director at Bank of New York Mellon. Michael, good evening to you. Now, all the data out of Japan this week, pretty mixed, but not bad enough to justify a more bearish view on the yen. Is that correct?
Well, certainly. I mean, the economic data out of Japan continues to create the impression in the marketplace that although growth is stable, deflationary pressures continue.
So what kind of levels are we waiting to see the yen to fall to? I mean, the yen has dropped sharply in the last few weeks.
Well, it certainly has. And one of the reasons for that is the fiscal year end March 31st. Today, what we saw was perhaps the leading edge of capital flow out of Japan that had formerly been repatriated on window dressing during February and March. This outflow contributed to yen weakness on April 1st, and we expect that likely to continue with expectations of growth differentials, interest rate differentials against Japan. The yen is looking to be the weakest of the G7 currencies over the course of the second quarter.
Some people are betting on the yen dropping to about, 100 to the USD by the end of June. Is that too soon? What's your take on that?
That's a rather pessimistic outlook. I think that probably the BOJ and the MOF would consider that type of move to be perhaps not consistent with stability in foreign exchange markets. So I think certainly 95, 96 in dollar yen is fairly consistent with current trends, but 100 may be a bit ambitious for the end of the second quarter.
Michael, how about the Chinese yuan? Goldman has raised its 6 months target. I mean, it's looking at 674 to the dollar by the end of June, 666 by the end of September. What's your call?
I think that that's a rather ambitious call. There are some important developments in terms of the bilateral relationship between the U.S. and China, and it's unlikely to impact the dollar-yuan exchange rate. The U.S. government will not be declaring China a currency manipulator in its April 15th report, and consequently, the likelihood of the U.S. Congress issuing legislation to impose increased tariffs on punitive tariffs on China are out of the question at this stage. So there is a deal brewing, likely, that will encourage increased U.S. exports to China in return for maintaining the status quo in foreign exchange.
Michael, we have a minute to go. What are the best crosses to play at this point in time?
I think that one of the best crosses to play at this point is short yen against the dollar block. I'm particularly interested in the Canadian dollar, as well as the Aussie dollar. The New Zealand dollar appears to be overbought, and that has been confirmed by the IMF recently.
All right, Michael Woolfolk, thank you so much for being on the show today.